NVIDIA is worth over $4 trillion, and yet the stock is still up 43% this year. That's not normal, that's historic. But here's the question that every investor is asking themselves today. Can it keep going, or are we watching the top form in real time? Because when one company controls 92% of the GPU market, powers every AI model on the planet, and just dropped another next-generation chip, there's really only two outcomes. Either they rewrite the rules of computing, or gravity catches up. And I'm not convinced that we've seen the real test yet. There's a quiet threat that's building. Power bottlenecks, over-reliance on a handful of mega customers, and a geopolitical storm with China that could rewrite the supply chains overnight. In this video, I'm going to break down what's really driving NVIDIA's insane valuation, the one metric that I'm watching that could signal its next move, and whether this AI juggernaut still deserves your money at $193 a share. Hey, what's up? My name is Rick Orford. I've been trading since 1999, and I'm not a financial advisor. That is a good thing. I break down the numbers so retail investors like you and me can make smarter, more confident decisions with your money. So with all that out of the way, let's get into NVIDIA, because what's coming next could shake the entire AI market. I want to thank The Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. And you all know how much I love researching new stocks and trying to find the next best investment. So I'm proud to partner with The Motley Fool to bring you 10 stock picks from their popular product, Stock Advisor. Stock Advisor has beaten the market by almost 6 times. Go to fool.com/Ricko to get your 10 stock picks right now. Founded in 1993, NVIDIA went from a 3D graphics startup to the engine of accelerated computing and AI. Led by Jensen Huang, NVIDIA holds roughly 92% of the discrete GPU market, and its Blackwell chips power models at Google, Meta, Amazon, and of course, OpenAI. That's dominance, not competition. When you own 92% of a market this critical, you're not playing the game, you're setting the rules. And chances are, the device that you're using, some device that you're using today probably touches NVIDIA tech somewhere down the line. And the lineup goes beyond GeForce RTX for gamers and creators. It goes as far as full stack AI platform that includes Blackwell GPUs for AI factories and DGX Cloud for teams to train AI. So yeah, this isn't about gaming anymore. NVIDIA's quietly become the backbone of the modern digital economy. Then we have Omniverse, which enables enterprises to build digital twins in OpenUSD. While Jetson with Isaac brings edge robotics to the forefront of innovation. And this is just like being on my Discord channel, right? Because it brings you to the forefront of stock news while letting you talk with other people that are just like you, wanting to know about NVIDIA. So you could say that NVIDIA is making the building blocks for the next tech revolution, and everyone is paying to own them. Now, companies like BMW have been working with NVIDIA to progress, with the car company using Omniverse to design and simulate entire plants without spending on the nuts and bolts just yet. That's huge. They're selling a virtual factory before a single wall even goes up. And that's efficiency that's turned into revenue. NVIDIA's market cap recently surpassed $4 trillion and continues to tackle those bigger problems. So the question just isn't how high can NVIDIA go, it's what's left that it hasn't touched yet. Now, let's look at the stock to get a clear understanding. Today, NVIDIA stock is trading around $193. That's just 2.87% more than the last time I covered NVIDIA. And it may seem like a small, inconsequential move, but when you're a $4 trillion company, a 2.8% swing adds $100 billion in market cap. And it doesn't stop there. If you look at NVIDIA's stock, it's up about 43% year to date, as well as over the past 52 weeks. That is steady, consistent growth, the kind long-term investors can only dream of, but traders often underestimate. Their 60-month beta is 2.12, so do expect it to jump around twice as much as the broad market. Not so good if they lose momentum, but if NVIDIA's execution stays flawless, then there's significant upside for investors. And in plain English, when the market breathes, NVIDIA, it gasps. When it sprints, NVIDIA flies, and volatility, it cuts both ways. Timing this stock matters just as much as believing it. The last time I covered NVIDIA, it was all sunshine and rainbows with the catalysts. But there are risks and red flags to the business model. And one big risk for NVIDIA is that it has 5 yellow stars. It's China. By the looks of things, they may not want NVIDIA chips over there. And then we have the tariff issues, right? They're not going away anytime soon. But does any of that really matter? Well, probably not in the long run, but it's something definitely you want to take note of. Look, China, they're not exactly rolling out the red carpet for NVIDIA right now. Beijing has been encouraging companies to purchase less from NVIDIA and other US chip makers. Not subtle. And with the politics as they are, I mean, can you blame them? And then we have a problem with power, right? Multiple reports are saying that demand for data centers or powering data centers could increase by more than double by 2030. And grid bottlenecks such as power, transmission, and cooling, well, they're already slowing down deployments in those key areas. If power access gets interrupted, even the best GPUs are not going to perform. And this stretches their customer rollouts, which ultimately affects revenue and spending. In English, no power, no profits, right? AI runs on electricity, not dreams. Also, there is a little problem around customer concentration. Recent filings and news coverage suggest notable bias in favor of NVIDIA. Customer concentration means that only a handful of buyers account for a massive slice of the company's quarterly revenue, of which the company did disclose that one customer, which I'll call customer A, accounted for 23% of the revenue. A customer B accounted for 16%. And that means that demand ultimately traces back to just a few names, which could lead to volatility in their profit and loss statement if only a handful of purchasing decisions are changed. And that's the kind of dependency that can turn a strong quarter into a sudden earnings miss. When your biggest customers blink, the chart dips. So while NVIDIA's story does sound bulletproof, there are cracks that I see forming at the edges. And the smart money, well, I think should be watching it closely. So with all that out of the way, is NVIDIA stock a buy? Well, a consensus among 47 analysts rate NVIDIA stock a strong buy with a score of 4.7, and that rating has gone up over the last 3 months. So I'd say that Wall Street isn't just confident, they're doubling down. And that kind of conviction, it doesn't come easy, especially after this much growth. For investors, I see this as a long-term play. And for traders, it serves as a momentum engine. Data center GPUs and a robust software stack can sustain compounding demand, although the ride, it's not going to be smooth. And that is the real takeaway, right? Volatility, it's not the real enemy here. It's the price of admission for outsized returns. So are you buckling up or are you sitting this one out? Let me know in the comments below. And while you're there, if this video was helpful to you, like and subscribe. It'll help others find the video. It'll support the channel, and you won't miss out on any of my future deep dives. Well, that's it for me today in this video. I wanted to thank you so much for watching, and I'll see you next time.